Good afternoon, everyone. My name is Vic Farley here from the City of San Jose's Office of Economic Development. We're intending to host a webinar for the next hour covering the topic of how to apply for a PPP loan. Now I can see participants are just joining us now. We're up to 28 and the number's going up. So I'm going to give everyone a minute to be able to understand what this is, and then we'll get into the presentation itself. If you've joined one of these webinars before, you'll know that what we try and do is give a presentation for 20 to 30 minutes, and then we have a very open Q&A session. So I would like to encourage everyone who's now a participant, we're at 33 participants, that if you have a question, please use the Q&A box here on the screen to register your question, and we'll do our best when we go through the Q&A session to work in order of the questions that have been submitted. I'm delighted to have with me on the panel Ali Lopez from the Small Business Development Center and Anne Height, also from the Small Business Development Center. Great to have you both today. They'll be introducing the SBDC in a moment. And I just wanted to say right at the outset that there's no need to take any notes, because everything that we're going to present here in the slide deck and a recording of the webinar will be made available to you within the next 48 hours. I've been a bit of an optimist. You can see on that slide where I've said within the next 24 hours, but really I should have said 48. But we do our best to make sure that everyone who registered can receive a copy of the information. I've also put links into documents today because a lot of the information that's just come out is very fresh. It's 1 or 2 days old from government, federal and SBA sources. So I thought it might be helpful to everyone here who's participating, who needs to want to read some of these documents in your own time. You've got the links there. So really what we're going to try and do over the course of the next 20-25 minutes is provide you with a bit of the kind of detail, get into the weeds of an application. What does it mean to apply for a PPP loan? And we've highlighted what we think are the key things, but as ever, it's really important that you feel free to ask whatever questions you like, and we'll do our best to answer them. So that's enough from me. Let me hand over to Ali and Anne, who can just give you a quick introduction on SBDC.
Hi, so Ali Lopez. I am the program director for the local Silicon Valley SBDC. And what SBDC does is provide access to tools and information for small businesses. All of our services are free. Our main way of providing advising is our one-on-one advising, as well as free and low-cost workshops. We often partner with Vic here in San Jose for these type of workshops, and other cities. If you're within the county of Santa Clara and you're looking for an SBDC, we would be it. Our contact information is on there. Feel free to go to our website, learn more about us. If you don't have an advisor and you're trying to go through the PPP, you don't have a CPA or a tax attorney or whatever to help you, we have experts like Anne, who's going to talk about herself in a few minutes, to assist you with the application process. Go ahead and go to the next slide. So as I said earlier, what does SBDC do? We provide access to information and resources to help you sustain and grow your business. If you're just starting out, although it's probably not the best idea to start a small business right now in the middle of a pandemic, but there are some businesses that do flourish, but we can assist you with starting, growing, sustaining, and hopefully applying for some of these grant and loan programs. The next slide. So one of our fundamental services is access to capital. We work with a lot of banks, credit unions, lenders like CDFIs, who are the main lenders right now for the PPP, and Lendistry, which is the one that's administering the California Relief Program, is also a CDFI. We help package your loans if it's like a regular 7A SBA loan, help you with projections, help you put your financials together, your business plan, whatever you need to help package your loan, we can assist you with that. As it says on the last bullet, that we can also help you with the EIDL, which is the Economic Injury Disaster Loan, the California Relief Grant, which is, correct me if I'm right or wrong, and it's going to reopen February 2nd?
Yes, that's correct.
Okay. PPP and other funding, as well as the PPP forgiveness.
Cool.
Next slide. So again, here's our website. We serve the Santa Clara County. Please, if your businesses need help, just, reach out to us. All of our services, again, are free. So I'm going to hand it over to Anne if she wants to talk a little bit about what she does.
Yes. Hello, everybody. My name is Anne Height. My background is in banking, finance, and investment. I do have a strong credit background, and I've worked with a lot of different loans and loan types for small businesses, commercial businesses, commercial real estate. So I understand this process very well. Um, Getting into the financials is going to be an important analysis that we need to do going in, because as I've read a lot of the details, you need to be very thoughtful in presenting your case for your loan, because I've seen where people have gotten declined because they don't know the art of filling out a form. Um, there's an art to it, and that's what we're here to help you to do, to get an advisor to work with you to get it done right so you can be successful for your business and your employees.
Thank you, Anne. Thank you very much. That's very helpful. And that's the panel for this afternoon. Let me just go back here. This is the agenda for the next 50 minutes. We will do a quick summary of what PPP is, just to make sure everyone has got the basics. I'll give you the quick tips. This is what I've been reading this week, and I've just tried to summarize it up, that if you're looking to take action, this is what you should be doing now as a business owner. We'll quickly cover the key terms and eligibility. I suspect almost everyone listening in today will be familiar with those. Indeed, I suspect many of you claimed a PPP loan last year, so you'll have a good insight into this. But then item 4 is kind of where we want to focus. What's new? What's important? Now, what's new are the gross receipts, and we'll come on to explain why shortly, because you've got to show how your receipts impacted your business in 2020. And we'll also look at payroll, because it's the size of the payroll in dollar terms that drives the loan calculation. Those really are the fundamentals in play here. There are a lot of other issues, a lot of technical questions, particularly if you're self-employed or a sole proprietor. And so I've got the technical information from US Treasury and SBA. So if we've got some detailed questions, that's where we'll turn to have a look at it. So that's our agenda going forward. That gives you an insight. And as I say, please don't take any notes unnecessarily, because all of this slide deck will be made available to you in the next 48 hours. Let's quickly go down. So here's the summary.
Vic, before we get started, I'm going to
Yes,
also post the links as you go on the chat.
Perfect. Perfect. Thank you very much, Ali. Excellent. So PPP is now live, and lenders are accepting applications. That's important. There was a slow start last week for certain underserved communities, but now from January 19th onwards, effectively all lenders participating are beginning to accept applications. This is a first come, first served program with an end date that all applications must be submitted by March 31st, 2021. Very important, okay? First come, first served. And finally, one of the more kind of nuanced points here is if a business did not receive a PPP loan last year in 2020, then potentially you can apply for 2 loans. And these are known as a first and a second draw. Now, we don't think there are going to be that many businesses that apply for both a first and then a second draw, but there may be some, and different rules apply. But today we're going to focus on the second draw. And if there's anyone tuned in listening today who doesn't have a PPP loan, didn't claim one last year or didn't receive one, then you're going to have to look carefully at whether you're going to be a first draw applicant or a second draw applicant. So I think that's the key summary. We're now live. It's first come, first served. And you may be potentially applying for 2 loans in the course of the next 8 weeks, not just one. Here are the quick tips. So most lenders are now open to receive a second draw application, but you must check. Many banks and lenders will already have reached out to customers, but not all. So if you choose to change your lender, or if you're looking elsewhere, you can check online who is available. Use Lendermatch. And in addition, search out some of the so-called fintech lenders. So really, the quick tip here is do your research now. Secondly, this is really a bit like finding your social security number or something. You've got to find your application number if you received a loan last year. So the application number is on the official documentation that would have been distributed by the lender, and you should have kept that because you will need that application number. Thirdly, you need to find your full 2019 tax return. We'll come on to that later, or the most recent, because this will be a compliance check undertaken by both the bank and the government and the federal government through the SBA. So you will need a tax return. If you don't have a 2019 tax return, then you must use the most recent. But it would be an important point that you need to be sure that you have a copy of. And in reality, if you don't keep a copy of your tax return, then you must go and see your tax preparer or a CPA that completed that paperwork, or if it was done within your business, the finance person or person that administers within your business, whoever put that together and submitted that document, you will need to have a copy of that. And last but not least, you'll be looking at your financial records, your profit and loss statements by quarter for 2019 and 2020. So if you have any doubts about what we're going to discuss here in relation to the term gross receipts, do see your tax preparer and CPA. And as Anne and Ali were saying, if you need free technical advice on this, then please go to SBDC and one of our other technical assistance providers within the business owners network space. Thank you very much. So that's the quick tips. Key terms, what is PPP? Basically, it's largely unchanged from last year. Maximum loan value is $2 million. It's guaranteed by the government. And the definitions are driven by the fact that the loan is calculated on payroll, 2.5 times the monthly payroll. But a recent innovation here is that it will be 3.5 times the payroll if your business is in the accommodation and food service businesses. That's very important if you're a restaurant. And you'll know if you are because you can check something called the NAICS code, the NAIC code. And if you have a 72 series number, then you will be entitled to claim on the basis of 3.5 times your payroll. So it's a significant benefit here in terms of your PPP application to know if your business has a 72 series NAICS code. Now, if this is very unfamiliar to you, you've never heard of NAICS, you don't know what a number is, send us an email and we will try and ensure that you get a link because there's an online government website that allows you to check that easily, free, and we can put that link up there for you. You know, if you've had a PPP loan, it can be forgiven, provided it's used for the approved purposes, primarily 60% of that purpose being payroll. The interest rate will be fixed at 1%, and you have up to 5 years to pay that back for any amount that is not forgiven at the end of the day. And last but not least, the loans will be processed by the lender based on the certification of what you, the business owner, is saying as the accuracy of the documents you submit. So it's a really important point. You, the business owner, are making the application to the bank. The bank in turn are taking that to the SBA for approval. Once it's approved, you then have to comply in order to receive your money. So that's the key terms, really. Okay, who's eligible for a second draw loan? Essentially, a borrower is eligible if they've really done and complied with the 4 points below. You must have been in business as of February the 15th, 2020. So if you formed your business, it came into existence on February the 16th, you are ineligible to apply. So you have to have been in business up to that date of February the 15th. If you've previously received a first draw PPP loan, you must know the status of that loan and whether there are any outstanding issues or not. So you must contact your original lender if you have any doubts about the status of that loan. And then in terms of the criteria, no more than 300 employees, full-time equivalents, and you must be able to demonstrate at least a 25% reduction in gross receipts between comparable quarters in 2019 and 2020. Why? Because what the SBA and the federal government are looking for is to demonstrate that you as a business have been impacted by COVID in 2020, and that's been reflected in your gross receipts, your income that you've received as a business, and COVID has economically and financially damaged your business. And the way to prove that is through your profit and loss statement and your other financial statements that are signed and authorized and authenticated by you as the business owner. We'll come on to that in more detail in a minute. Anne, Ali, is there anything you want to add here on the eligibility, or should we move on?
I think you're doing great.
Oh, that's okay.
Yeah.
Okay. So let's get into the meat of this. You've got your application, you're looking at the details, you're comfortable with it, and now you've kind of got to say, did I experience a revenue reduction? And the first thing to say is it must be 25% or greater in 2020 relative to the year before 2019. Now, the interesting point here is the business can choose any quarter in 2020, but it has to be the same as in 2019. So you're really looking at 2 years of figures here. You're looking at the January to the end of March is quarter one, April to the end of June, quarter two, July 1 to September 30th, quarter three, and October 1 to December 31st, Q4. Those are the 4 quarters in the calendar year that your business must show how did you do in terms of income and expenditure over those 8 quarters. And if, for instance, you experience your biggest loss in quarter 2 of 2020, April to June, you must then look at the same quarter, April to June in 2019, to see, in fact, whether you actually did experience a 25% or greater drop in gross receipts comparing like with like. Now, the important point here is you've got the freedom to choose which quarter. So you can look at that. So if overall the business in 2020 did not lose 25% of gross receipts compared to the year before, that's okay, provided you can show that within 1 quarter, 1 3-month period, that you did experience that. And that's going to be the one thing you have to get right and do preparation work on to know what you're submitting in the first place to the bank as the lender. Anne. You're on mute, Anne.
I'm sorry.
That's okay.
That's the key to getting your PPP, is understanding and analyzing your quarter over quarter performance, or lack thereof, 25% or greater decline.
Exactly.
To get the attention of the underwriters to see your point. Yes.
And if you're not familiar with looking at your business on this quarter by quarter basis, it feels to me quite important that you should seek advice at the earliest possible moment. Don't leave it to the end. But because time is important, a business owner should be coming away from this webinar now when we finish thinking, I know where my documents are that give me my financial statements, or if I don't know where they are, I know who I need to talk to find them. Okay, so let's look at this in more detail. There's an interesting difference here about when you have to provide that information. So if in fact your application shows that you wish to borrow under $150,000, there's good news here. You don't have to provide this documentation until you come to complete the loan forgiveness. So in effect, what that means is the bank as the lender will accept your application, but they may not, some can insist, but they may not require you to provide the documentation on the quarterly loss between the 2 years before they process your application for the loan. However, if the loan that you are seeking is above $150,000, then the applicant must provide all the documentation substantiating the reduction at the point they submit the application for. Otherwise, the bank won't process it. The underwriting will look at that in terms of compliance and see that the evidence is not there. And this is probably, in a sense, if I'm able to say one thing that everyone will remember, it's you need to have that information first in order to know whether in fact your payroll calculation that we'll come on to in a moment is going to be above or below that $150,000 threshold. And we know from the data last year, I was looking at all the PPP loans that came to business in the city of San Jose, that at least 3,000 businesses had PPP loans above $150,000. So we know it's a very important thing that businesses have to get right. And again, I'm sorry to repeat myself, but if you have any doubt about what gross receipts are and how you show that and evidence it, please talk to your tax preparer, your tax attorney, or your CPA now. Don't leave it. Let's come on to the next slide. Okay, so what documentation do I need to provide to corroborate that my business entity sustained this loss in gross receipts? You've got a choice here. So this is in effect what a CPA would, I suspect, would be asking of you, the business owner, as the client. You can produce financial statements by quarter, and those would be the statements that you have signed off attesting to the accuracy. You can look at monthly or quarterly bank statements and do a reconciliation over those periods to see what has been the loss over which quarter. And last but not least, if you want to be absolutely plain safe, you want this anyway to accompany any financial statement so the underwriter can see the evidence of which you've drawn from, is the annual IRS income tax filing of the business, if you have that. Okay. And Ali, do you feel there's anything I need to add on this point in relation to the evidence that's required to document and justify the financial loss?
Yes, there is.
Okay.
Lenders are sticklers for having detailed information and having the information readily available. They typically like to ask for it up front because they know on the back end it's going to be difficult to get it if you get the money first. So they like to collect the documentation up front. It's good that you have it because you are going to be signing and initialing certifications that say you will do very specific things based on the information, that the funds that are assigned to you are for specific reasons, like as you put in the application, like it covers it here. And so those certifications really tie back.
Excellent. Thank you. Thank you. And we've already got questions in the Q&A on this. It won't surprise us. And I just wanted to say to all the businesses here attending this webinar, we will go through those questions when we get to it at the end. Thank you, Anne. Let's move.
Vic, I've been answering some of the questions that you've gone over. So
okay, cool.
So if you've already presented it, I just kind of reinforced it by answering the questions as well on the queue. Another thing is, I don't know if you're going to go into this later, but You also want to know your health insurance, your state
Yes.
wages for your unemployment. I mean, there's a list of other things. And when you go to the SBA website, they'll give you a list of the other documents that you're going to need. But somebody asked, how do you present your 2020 gross receipts? Obviously, you need your bank statements, your P&Ls, and those are things that SBDC can assist you with. If you don't know how to do a profit and loss, you're going to need something similar, a cash flow statement, something to show, the comparison and to provide that 25% decrease.
In an ideal world, it would be fair to say, Ali, you would have all three in front of you as a business owner. But
in an ideal world, yes. But we've found, and I've got a few of my other advisors as attendees, that we could all tell you that the majority of small business owners, especially right now, that's not what their paperwork is not what they like to do.
I understand that. That's why I felt it was important. I apologize to people who have got that kind of level of understanding, but I really wanted to cover this point in some detail for a business owner who wants to make a PPP application, that they've got to get this right. As Anne was saying, the art behind the science is understanding the numbers that you're going to submit. So this is a key thing, really, that I felt we should cover and encourage people to think about. Thank you. What's included in gross receipts? Well, again, this is taken from the SBA's technical document. For a profit business, as in your business is there to make money and make profits, gross receipts generally are all revenues in whatever form received or accrued. So essentially, you have to know your accounting method. Is it cash accounting or accrual accounting? And whatever the source of that income is. And that includes the sale of products and services, interest, dividends, etc. You can see the list here, but excluding net capital gains and losses. Okay, so again, that's a bit accountancy jargon speak, but essentially it's really important that you're comfortable as a business owner, that you know what your gross receipts were for 2020, 2019, and then broken down into those 4 quarters in the 2 years, because those are the key numbers that we'll come on to look at. What's excluded? So there are certain things here technically, again, a CPA and someone like Anne and Ali, I'm sure, will immediately understand and recognize this, that you can't include as part of your gross receipts. And that's taxes generally. You can't include taxes. You can't include transactions between a concern and its domestic or foreign affiliates. And that's a tricky one legally. You should, again, if you're part of a group, or if you have overseas ownership that's connected to other businesses, again, please take advice on that point. I have no expertise on that question. And secondly, one here put by federal government, that amounts collected for another, as in acting on a broker for a third party, such as a travel agent, real estate agent, advertising agent, essentially the role of an agent cannot be included. So if you are a real estate agent, for instance, please check out the details here and take advice again from Anne and Ali on this point. All other items such as subcontractor costs, reimbursements for a contractor at the customer's request, investment income, employee-based costs such as payroll taxes may not be excluded from gross receipts, because that's the cost of doing business in effect. And Ali, is there anything you want to add on that in terms of known exclusions?
No, nothing.
Okay, that's fine.
This is straight from the SBA, so yeah.
It is, yeah. No, I always go to the source documents to start.
Yeah.
Okay, so we've got a sense of gross receipts. We kind of know which quarter we experienced the greatest loss, over 25%. We compared it to 2019. We now want to know, really, okay, I'm now eligible to apply from that. What's my loan value? How much am I likely to be able to get from a PPP loan? And really the most significant component here that drives the calculation is your payroll, okay? Now, the way this is done is essentially is to calculate your aggregate payroll costs using data from the previous, either from the previous 12 months or from the calendar year 2019. There's a lot of technical information that sits behind that one bullet point, but essentially you are aggregating your payroll costs, but you're also having to make one very important thing known to you. I'll come on to seasonal businesses in a minute. It's a bit of an anomaly, but essentially the other factor here is that there's a cap on the payroll cost of an employee, and the cap is $100,000. And so if let's make up a figure here, if an employee had an actual salary each year of $150,000, you can only count the first 100,000. You could not count the difference, which is the $50,000. So the ceiling, if you want to divide it in terms of months, you would say the ceiling on the payroll of an employee of $100,000 is $8,333 a month. Or if you were calculating it by weeks, you would divide $100,000 by 52 weeks. And I think from memory, that's $1,927 every week to get to the $100,000 over 52 weeks. So you have to know what your calculation here is on payroll. And Ali, is there anything you want to add on the payroll calculation?
Nothing on my part. It's complex enough without
without me making it worse. Okay.
Yeah, I mean, because obviously everybody's going to have a different scenario.
Yes.
You know, if you're going to, are you a sole proprietor with employees, without employees? And then you've got owners that are not necessarily on payroll. How do you calculate that? So this as an average is good. Kind of a most, but obviously when we start going into like your advisor, we'll have to really look into specifically your case. So
and to come back to a point you were making a few moments ago, Ali, you can include within that payroll cost the cost of the health insurance, can't you?
yes.
So
yeah, there are other things that can be included.
So effectively, when I've looked at a profit and loss statement on a business, I might have the wages and salary as $1 number on the monthly statement. Then I might have another number. Let's call it employer health insurance contribution. How much am I paying towards the health insurance of my employees? That might be another number. So there's more than one number to look at in your financial statement. And again, I think that when you add, let's just say those two components of the salary plus the health insurance, so long as on a monthly basis you can go up to $8,333 and it would be counted. But the moment it goes over that number, it acts as a bar.
Right, you have to max it up to 100K a year. You can't go above that.
Exactly. Yeah. Exactly.
Now there's other things. So sorry.
Carry on.
You're going to look at vacation, parental, family, medical, or sick leave. You're going to look at all of the employee benefits, including, retirement. And then they do allow you, and I think you might have covered this a little bit, the state or local tax on the compensation of the employee. So I think that's what they call the matching for the employees. So there's a lot of things that you have to look at, not just payroll.
Correct. So I was trying to, if you like, forewarn everyone, not frighten everyone, into that they've got to pay attention to the payroll and what the elements are. If there's some good news here for the participants of this webinar, it's that you can see the list if you look at the SBA regulatory document. And we're going to attach that as a link to this slide deck. So when this goes out to everyone, you'll be able to click on that link and you can read it for yourself. And if I were giving business owners a bit of homework this weekend, it would be to click on the link, have a read of it and be comfortable with it, and then go and talk to your CPA about it, because then you're sharing the same information technically about what does this mean for me.
I should also add that a lot of payroll providers are packaging these reports
yes,
for their clients. So it's just an outreach to your payroll provider to ask for the reports to be able to fill out to get to some of these numbers.
And that's a super important point. Thank you very much. A lot of people do outsource their payroll, don't they? I was working with a construction company and precisely that issue came up. That's a really important point. And again, would it be fair to say, and do it now, don't wait?
Yes, absolutely. Because
Yeah.
the earlier you do it, the less challenges you have,
Yep.
and you don't get, you know, stuck in the rut when systems go down last minute.
I'm sure they don't. Well, I think the key point here is we know it's first come, first served. We know that businesses and systems can get overloaded. So I think there's every encouragement here, isn't there, to get this sort of level of understanding complete now to enable you to have a really good idea about how this is going to work for you and not leave it. If you're self-employed, there's more kind of nuance and detail there about whether you're self-employed and you have employees or you don't have employees. That again, from what you were saying, Anne and Ali, I would encourage the self-employed proprietor or business owner to, again, get into it now, don't leave it. If the amounts are very small for a self-employed person, that loan value is, let's make a number up for the purpose of this example. If the loan value was, say, under $5,000, it could be that you've got to look more carefully at unemployment insurance and making a claim. It could be that there's a choice somewhere that says, actually, I'm better off doing this and not claiming a PPP loan.
And there are a number of opportunities out there right now, and
Yep.
some of them work with some and some don't. And
Yes.
having somebody who's able to help you sort them out and identify which one is going to work best for you and your business is a very important factor right now, because a lot of us small business owners are pivoting. And if you
Yes.
don't pivot correctly, you will miss your opportunity for an upswing.
Yeah. So there'll be some businesses in San Jose that are essentially seasonal. They only, for instance, actually operate in close to the holiday period of Q4, Thanksgiving through to the Christmas holiday break. That's their business. It's just that. Or it could be that they run something in the summer. It's a summer business for that vacation period. So if you don't have a traditional payroll and you're a seasonal business, there are a different set of rules. So I just put them in there just to highlight that on the slide deck, that if you are in that environment, you would call yourself a seasonal business, you just bring people in, for instance, to do the fruit picking in the month of September. You don't employ anyone else on the farm for the other 11 months. There's a route through which you can still make your PPP claim by adopting a calculation for the fact that you are a seasonal business. It's one of the tweaks here. And there's some other tweaks that for instance, if you had a PPP loan last year, you don't include that in the calculation this year. So the payroll is the fundamental determinant of loan value. That's the most important thing. If you have a high payroll, you get a sense of, for instance, if your payroll is going to be in the region potentially of in excess of something like, if the maximum here is $2 million as a PPP loan over what is effectively 2.5 months, then if your payroll is going to be close to $10 million and above, it looks like you could get very close to the $2 million cap. And again, many businesses were, somewhere in the region of about 100, 150 businesses in San Jose received a PPP loan last year in towards the region of $2 million. So it is a very significant component to understand the payroll calculation and ensure you've captured every eligible element that is allowed under the regulations that have just been published this week. So just to sum up, payroll drives the loan value. You have to know that, you have to get that information, and you then submit that in the application. And that is what the underwriter in the bank, the lender, will consider when they are looking at to determine what the value of the loan is going to be. Okay, let's move on. So here are the links to all the documents. The second draw application form will be here, the PPP regulations, a list of participating lenders, as well as the additional information. And there is a new loan forgiveness form here that's just come out that I've attached here as well. If you had a loan last year and you want to check anything, and then that's my details above. And here are the references that we use for the purposes of this slide deck presentation. So taken from the US Treasury, which just came out on the overview, the interim regulations from Treasury on the detail here, and then how to calculate the payroll. And that's a really good one because it's got the different scenarios in it for whether you're an LLC, an S Corp, a C Corp, self-employed, sole proprietor with or without employees, and also a not-for-profit business, which we haven't covered today. So I hope that's been helpful for you. I apologize, that was a bit lengthy, a bit longer than I anticipated. I'm delighted Anne and Ali are with us this afternoon, and we're going to have a look at some of the questions now, just going down in turn. And Ali, do jump in, please, if it's already been answered. So Brian is asking, which tax form is needed to show quarter-to-quarter reductions? And do you have a sense of that one?
That's not a tax form. It's the income statement or profit and loss statement.
Right.
So it shows the gross receipts for the quarter. And as you say, quarter over quarter, 2019, 2020, that's how you start to look for trends, downward trends within your business to demonstrate that you have had a significant impact by this pandemic.
Thank you. So important to distinguish here, isn't it, between your tax form, which is annual and submitted once a year to IRS, and your quarter-to-quarter figures, which are your profit and loss statements. Thank you. Runa has asked, as per SBA guidelines, this depends on the accounting method, and we follow the accrual method, and our revenue or receipts are based on dollars invoiced. So again, that feels more like a CPA type question, isn't it? If Anne, you're accounting through your profit and loss statements based on accruals, then that's the standard way in which you would compare quarters.
I would actually look at it with the balance sheet as well.
Oh,
like
okay.
The full picture, because you can then start to suss out issues if things are not done correctly.
Do you have a thought in mind as to what a common issue might be?
Well, yes. So accounts receivable. So somebody might have sold something, but because of the accrual process of accounting, when that transaction is recognized, may not be in the same fiscal year.
Got it.
But knowing the timing makes all the difference, and it's what ends up on the tax returns that on the income statement that's going to be showing on your tax returns eventually.
Got it. Thank you.
So the gross receipts, it will. So depending on the tax return, on the Schedule C, it's going to be like your line 1A, right at the very top. It's easy to see before anything is deducted from it. So if you wanted to look at it maybe from an annualized basis.
And you're popular.
I'm so sorry.
That's okay. Yes.
On an annualized basis, then yes, you can see it.
Thank you. George has raised an interesting point. My first lender is not participating in the second draw, and most other lenders are taking applications for a second draw only if they processed a first loan. So any advice, please? Basically, George has got to find another lender.
Yeah, use Lendermatch. I mean, you've got that. A lot of the CDFIs are accepting applications for first draw. So if you're using your first lender is a larger bank, sometimes they're only taking applications for existing clients or participants from the previous PPP. So you might want to look into CDFIs or use the Lendermatch program on the SBA website.
Very good, Ali.
I put that on the chat.
Very good. Thank you, Ali. I was going to say, I have a list which I can send out to businesses if anyone's interested. I have a list of the CDFIs that are based here in San Jose.
Yeah.
I also have a list of all the fintech online financial institutions that are offering PPP. I obviously don't know their individual requirements or the way in which they process applications, but I have that available as well. If a business is looking to secure a second draw PPP loan from a new lender, please contact me at my email address, and I can forward that to anyone.
And
Sorry, Anne.
we're also working with local lenders that are open to doing PPP, and it's good that you are prepared to have a conversation with those lenders because they want complete packages and they are quick to, send you an incomplete application notice because they don't want to deal with it.
Yeah. It's a painful truth, isn't it, that some institutions are more receptive and others are not. Okay. So Pinnakin has asked, how much money can you get? Is it 2.5 times the monthly payroll? And I think the answer is yes, but it could be 3.5 times the monthly payroll if you have a 72 series NAICS code business, which is largely either restaurant, food, or accommodation, like a motel, typically, or a small hotel, or that's how you do it. Unfortunately, not everyone. You can't change your NAICS code today. if you're a 69 series and become a 72 series, or the NAICS code is taken from your last returned tax form to IRS. The NAICS code will be there somewhere, and I'm sure someone will point it out to me where. But I suspect it's probably towards the top right-hand corner of your page 1. Thank you, Anne. Pinnakin asks, also, if you're the owner, how do you calculate your monthly payroll if you're not on a payroll? So essentially, that feels to me, just that sort of question is, I'm a sole proprietor with no employees.
Or he could be structured as a corporation, doesn't necessarily put himself as on the payroll, but there's owner's draw. I mean, you'd have to go back to, once again, sorry, but your CPA, it just depends on how your accounting system is structured and how your tax, how you, how you have it in your taxes. So sometimes there's your profit is shown as your
income.
Your income
on
your tax return, and it depends on what your taxes are. If you're a corporation, S corp, just there is a way to calculate it, but we can't go into specifics right now. We don't have a lot of time, but it will be reflected on your tax return.
Really interesting point there, Ali, that if you have this kind of business, do take the right advice, because it can make a big difference to you in terms of then what the calculation becomes for the amount of loan that you might receive. Okay.
Right. And a lot of people made a mistake previously that they didn't include themselves, that they, and when the PPP first rolled out in the previous round, a lot of banks were turning people down because they didn't have W-2s or employees, and that was incorrect. So we have to make, this time around, a lot of the lending institutions are more aware of how to calculate these type of things.
I mean, I may be talking out of turn here, but from the 2 or 3 banks that I've spoken to this week, they've all said that they feel more confident this year because they built their infrastructure last year to manage PPP.
Yeah, I've heard that too.
But it depends what your volume is, I guess.
And then, of course, and I think you touched a little bit on this, there's a lot of changes this year, and it's very targeted on the population that they want to target for these type of funding. So And I
Yes,
think it's to prevent what happened last time. A lot of the big businesses took advantage of the program, and so they want to make sure a lot of our low income and our small businesses can
benefit. Yeah.
benefit from the program.
Well, I did see the California figures that for last year, that essentially 75% of the PPP dollars went to 25% of the businesses. And those were over $150,000. So I think your point about targeting is really important here. And if you're a small business that's anticipating applying for a PPP loan under $150,000, I think you're in a good position so long as you don't delay and you do take the right advice on your financial statements now. If you need to find a second draw lender, again, please don't wait. Shop around, do your research online, use Lendermatch, look at some of the other resources that you can see out there. Check with people like who do the accounting software, Intuit. Again, there are a lot of people now being very proactive in this. Interesting question here. I own an S Corp and work for my corporation and have a contractor that works for me, but was denied by PPP last year. I am wondering what I need to do differently this year to qualify.
Oh, what's the reason for the denial?
That we would have to have a little more detail
Yeah, that's
about why you were denied. I think typically the lender will give you more specifics on what your denial was. So I would either sign up for SBDC so one of our advisors can look at your financials, see what happened last year, and see what we could do differently. But if you could demonstrate 25% decrease and you've got your financials together, I don't see why you would be denied unless there's something on the list of ineligible businesses or to that fact where you don't qualify from the get-go.
I didn't want to get into ineligible. I thought that
Yeah.
might be Anne, sorry.
Well, one of the things I find is that a lot of the declines that I've come across, people don't understand the question they're answering on the application.
Right.
Right. Mm-hmm.
Yeah. So let's move on then. Pinnakin's asked the question. This is an interesting one. Like before, will the loan forgiveness period be 8 weeks or 24 weeks to use the funds? I think there's a bit more flexibility this time around from my take on it. I don't know, Anne or Ali, what you think on the loan forgiveness period is.
Yeah, I think it's either or this time. I think you could choose, previously it was only 8 weeks because that's all they had, but I think now you can choose depending on specifically how you do your payroll.
And that is something that's important at the front end, because when you look at things at the front end and analyze your payroll and how things work, you'll be able to answer that question confidently going out.
Yep. So one of the things, little sort of things I picked up when I was looking at the regulations for, say, EIDL and the advance and the $10,000 you may be able to claim, which we still don't yet have the detail from SBA on, is you can't use that advance for the same period that you use your PPP loan. So you do need to know the dates you're working to. And also for the few businesses that can claim a first draw and a second draw PPP loan, you can't use it over the same dates as well.
Correct.
So it felt to me tactically when I was trying to work out, we've got California state programs for people to apply. We've got different federal programs. You really need to know the time periods you're going to use. So it felt to me with PPP, on balance, you should be using that money sooner rather than later. That if you got your loan approved in, say, end of February, you would want to use that unless you had some other grant program running over that period. Your business, you'd want to stretch the 8 to 24 weeks from 1st of March onwards, not leave it till the end, because you may be applying for other loans and you can't then duplicate over the same time period. You can't sort of double dip in terms of dates. I think is what the government's thinking about here.
Yeah, and they definitely are, and they are sure going to be looking at it. But again, it all falls back to planning. If you plan up front,
Dave, that we have updated PPP loan forgiveness. Sorry. I think we're
That was
having
going to be one of my
technical
closing comments, but yeah, that's okay. So essentially, the SBA through Treasury have just reformed the loan forgiveness form, the application form. So if it's $150,000 or less, the form is now a one-pager. And that one-page form just came out this week. And I think we'll probably be running a webinar on that loan forgiveness form in about 2 weeks' time, just to walk through that and see what it looks like, and maybe invite a bank to give a lender's perspective on the loan forgiveness form, as well as yourselves in SBDC. So I've just invited you to the next webinar, Ali. You'll have to forgive me. Okay, so, oh, interesting question from Catherine. Can you cover for the new owner that bought a business after February the 15th, 2020, and an existing business that was there for a long time? The previous owner had applied for the first PPP and forgiveness. The new owner took over, kept the same business with the same employees. Are they still eligible to apply? That's a good question. Wow.
Like many of the programs, if it's an existing business and it's just a kind of a change in hands, but it's still the same business, I think you should be fine, but you will need to get the documents from the previous owner.
Yeah.
He's asking.
So effectively, you'd have to have signed financial statements for 2019 to be able to compare with 2020. And they would have to be presumably signed or approved by a CPA or a financial person or a tax attorney that could satisfy an underwriter in a bank that these are legitimate documents.
Yep.
So there's a bit more complexity to this one, isn't there? Where you've kind of got to do your kind of diligence on the paperwork.
Yeah, and you got to make sure you have all the paperwork before you apply, because they don't like to piecemeal things, right, Anne?
Yeah, yeah. So again, I think it could be that, Catherine, your question, if you don't have answers that you're happy with, do contact SBDC. It could be that you'd benefit from a one-to-one conversation there about what does this mean, because I'm sure there's a lot of detail in there that allows you to sort of, or you would need to think through in order to understand whether you've got a good chance of a PPP loan. Let's move on. An anonymous question. Is the PPP loan in conflict with the California Relief Grant when you apply for forgiveness? That's an interesting point, isn't it?
It depends. It's a matter of timing. So,
Right. So basically, you can't complain. You can't use the same dates.
Right. So you can't utilize the PPP for that. So either the 8-week or the 24-week, along with the relief grant. So you have to pick one over the other.
and pick payroll versus rents or mortgage.
Yeah.
The other thing is, I do believe the borrowers need to keep a very tight rein on how they use the funds, because um, every dollar that you use, there's some percentages attached to some of them, and I'm sure it's going to show up on the forgiveness applications as well.
Yes. So we know from the forgiveness rules that, in theory, provided you've spent 60% of the PPP loan, at a minimum of 60% on payroll, according to what you can include as payroll, then 100% of that loan can be forgiven.
Yeah.
It's if the payroll and what you attach to the payroll is below 60%, then there'll be a proportion, a percentage that becomes a dollar number, which is then converted into a 1% loan that you repay up to 5 years. So I think in practical terms, provided most people play within the spirit of the loan and the regulations, most of this will be committed to payroll, the 60%, and then the 40% is where you've got the freedom in terms of working capital to pay either utilities, overheads, and your rent, to ensure that the business can sustain itself over that period of time that the loan is there to cover. The period of time being an important question, so that that period of time does not overlap with any other grant or loan application that you make, and that they're clearly separated out. And you have the documents, as Anne was saying, to prove that you spent the money in April and May, and that was the PPP period, or you spent the grant you got from the relief fund in June. So it was clear that there were quite separate time periods in which you were able to use and benefit those incomes, those receipt of loan and grants. VJ asks, can the payment to contractors be considered as a payroll to compute the loan amount? Again, I think you'd have to get into the detail of understanding your business there and the relationship between you and the contractors. I'm not sure. I think the honest answer there, VJ, is please talk to SBDC separately, or talk to your tax preparer or your CPA on that one. Okay. Sally asks, would the dollar amount be the same as the last PPP for sole proprietors? Well, in theory, assuming that your gross receipts and you were able to comply with the 25% reduction that made you eligible, and then your calculation on payroll was the same, then the answer would be yes. But it would depend on what your payroll calculation is that would determine whether it's more or less as a loan value. Would that be correct, Anne? Would you?
Yes, pretty much.
Okay.
Yeah.
Okay. Business started, Diang has asked, business started on December the 15th, 2019. Now 15 days gross receipt will be lower than any. How does this hardship, how can this hardship be addressed? So the business started, okay, back end of 2019, now 15 days.
She doesn't have the quarter over quarter to demonstrate the decline.
But she's eligible to apply.
Yes, she is.
How would they work that out, Anne, do you think, if you haven't got the 2019 4 quarters of financial statements?
Not sure about that one. What I would start looking at is what kinds of projections you had for your business,
right?
How you started out performing against those projections, and then what happened when the pandemic hit. So I would be looking at trends within the business.
Yeah, that sounds. I kind of agree with you there, Anne. My only thought is whether you're basically reduced to looking at just quarter 4 in 2019, comparing it to quarter 4 in 2020. That was my other thought.
Yeah.
And then my third thought would be: are you doing this on accruals or cash?
Even if it started in 2019, it's December. They
Yeah.
wouldn't have enough information to fill a quarter. So 2020 quarter, as bad as it might be, could be better. So
that's a good question. That's a really good question, that one. And I'm sorry we can't be.
One I would love to dig into.
Oh, that's an invitation for you, Deanne. Very good. Juliet, how can a brand new small business that has not been profitable to start payroll be qualified for this PPP? How can a brand new? Well, I suppose the federal government drew the rules up, didn't they? They introduced that date. They introduced the notion of demonstrating a quarter loss. That's kind of out of our control a bit. I couldn't really say much more than that. What do you think, Ali? What do you think, Anne?
Not much more.
I'm sorry, Juliet.
Not guidance on that one. Because who started by February 15th didn't have anywhere to go. Because that was the beginning of the pandemic. And if you, starting anytime in 2020, you must be a resilient business in order to have really picked up some steam.
Well, Juliet, I sympathize with you, but I'm sorry, the rules are out of our control here. Jennifer's asked, can the second round of PPP be used retroactively? No. Or can the fund only be used for overhead and payroll after the date the loan is dispersed? Yes.
Right.
So essentially, if you got your loan approved, signed, and the money is received in your business bank account, let's just say from April 1st, you'd be 2021, you're looking forward during the course of 2021 to utilize the loan for the purpose of then calculating loan forgiveness. Catherine's asked, previous owner applied for a first draw. Can I still apply for first draw? Oh, okay, sorry, I'm mumbling. If the previous owner applied for a first draw for June to October of 2020, can I still apply for both first? Again, I think you've got to talk to a tax preparer, CPA on that one, would be my view.
So they purchased the business and they're wondering if they, yeah, so you're going to need historical information on that. Or hoping the previous owner will cooperate with you.
I mean, just looking at the bullet point there, it's difficult to feel I would know enough information to give you an answer. But if you want my hunch, and this is for information, not for advice purposes, my hunch is you couldn't make a first and second draw again because it's the business just with a change of ownership.
Yes.
But that's a hunch, and please don't take my word for that. Take advice from an expert. I'm just trying to give you what I think is a sense here that the government, reading behind some of the regulations, are concerned to avoid double dipping on the one hand and people retroactively changing their financial statements. And that's why they're sticking with IRS tax returns to kind of, in a sense, prevent these sorts of scenarios. But I wish I could be more clear or authoritative. These are good questions. Can you show the slides on how to contact advisor SBDC again and where I can rewatch the video? Okay, the video should be circulated to every person who signed up within the next 48 hours. We'll try and do it within 24, but truthfully, sometimes it does take a bit longer. And yes, I will go back to the contact the SBDC slide before we finish, but you will get the slide deck as well when it goes out with a copy of the recording with a link, so you can access this as well. Last question, I'm a 1099 independent contractor with no employees. What do I need to do? How do I apply for forgiveness checks that I pay for myself? So there's kind of three questions really in there. You can apply, first of all. But again, you need to take advice, whether that's say through a CPA tax preparer or say SBDC, to know what the likely loan value would be based on what you pay yourself, which you're perfectly entitled to do, but you're going to have to compare 2019 to 2020 the same way that an S Corp or an LLC would when they make that application. When you
so they're going to look, they're going to look at your Schedule C.
Yes.
So if you filed a Schedule C, you should be fine as an independent contractor with no employees.
Yes.
They're also going to look at bank statements, whatever you can show of your income and your expenses, probably put together a P&L if you can, right, or get a CPA or SBDC to assist you.
So I came back to that slide we put up much earlier on in the webinar that sort of said three sources here, isn't it? Your IRS tax statement, because that will have your Schedule C number in it, the amount paid. Then there'll be your bank statements, which authenticate income and expenditure. And then there'll be a signed financial statement for the quarters. Those are the three core pieces of financial information that, if you're an independent contractor with no employee, I would encourage you now to do your sort of diligence on your paperwork and talk to the people you need to talk to. That, I think, has brought us towards the end. I want to thank everyone, certainly on behalf of the City of San Jose. Thank you, Anne, and thank you, Ali, for participating today. We will be planning another PPP webinar for next week, because I know there are a lot of businesses in the city that need to know more about this. We have the recording to go out in the next 48 hours. We have a slide deck. I would encourage everyone to look at the SBA website, to look at Lendermatch if you are looking for a new lender. Contact me on my email if you want to know who the CDFIs are. Contact Ali and Anne through SBDC if you want to make an appointment to talk about the business, your business. A number of the questions here have been really good questions, quite technical, quite detailed, and need a sort of a good examination of the information. But you can hopefully have got a sense this afternoon of the importance of understanding your financial statements and showing that loss, and the importance of understanding payroll and what's in that payroll calculation to determine loan value. There are a lot of other things we could have talked about PPP today. There's a lot to get your head around, but I felt those were the two key big issues that any business owner needs to have a sense of to understand how they're going to make their application for a PPP. Ali, Anne, can I give you both the final words while I just flick back up here?
Sure. So if you need help, reach out. I mean, don't feel like you don't have anybody out there to help you out, even if it's obscure questions. All of our advisors are well informed on how to navigate through the PPP process, and they've got great knowledge on other things as well. So if you don't qualify for PPP, we might be able to get you some sort of funding outside of it. There are still traditional lending. It's not just all of the COVID-19. There's other monies out there. So, don't feel like you're by yourself or you're alone or that you don't qualify for anything. I'm sure we'll do our best to find something to help your business out.
Sure. We have a myriad of loan types, different types of funding, different ways of raising capital for your business. And that's what we're in the SBDC doing to help businesses thrive and survive in 2021.
Thank you, Anne. That's been fantastic. I'm certainly involved at the moment in 4 different financial access to capital projects. We've got the California State Relief Fund, which is the business grants. We've got the California Rebuild Fund, which is the up to 5 years loan program, offering loans up to $100,000 at I think 4.25%. We've got PPP now with us. We'll soon have EIDL and the $10,000 advance. And then we've got EIDL as the main loans that's offering up to, I think they haven't set the final limit, but I assume it would be $150,000. Like it was in 2020. They haven't yet launched that, but I did hear that some of the details now, they're able to turn around applications they expect in 2 weeks, not 2 months, which is where they were a year ago. So I think we're going to see a very different kind of operation on EIDL. So business owners, keep your eyes and ears peeled, to use an old English expression. Look out for information. The City of San Jose will be providing regular updates via its social media, via our SJ Economy web page, and through regular webinars such as these. And if you're unable to get if you're unable to get a question answered, always come back to me on an email address. I've tried to help businesses as much as I can, but it is informational. I'm not here to provide advice in the way a CPA or a tax attorney would. But it's been great that you've participated in the last hour. I hope you got something from this. Thank you, Anne. Thank you, Ali. And I look forward to seeing you all soon in our next City of San Jose webinar, probably next Tuesday on PPP, and then next Thursday on California CA Relief Fund. I suspect those are the dates we're working to. Thank you all very much. And if you're a business owner, I wish you every success this year. I know you're having a very tough time. We're here to help as much as we can. Thank you all, and good luck with it.
Thank you.